weekend. Absolute chaos at my end. Just in the middle of winter, the water supply stopped working. So I'm literally waiting for the repairman to come, and it could be any moment. So I'm on edge, literally.
You want me to handle it for you? Do you need to get off camera?
If I hear the doorbell or knock, then yeah, or a phone call, I'm gonna run. But yeah. It's crazy. I've just literally been on the phone nonstop, but a lot going on, and good to see you. Did you want me to? Yeah, I'll start first. Yeah.
Yes, go ahead and start the party. Go for it.
Okay, cool. So, you guys, we've been on this roller coaster for what seems like years now, right? I'm sure, Yusuf, you're going to be talking about the market later on, but apart from Pundi X and Holo right now, the market is just in the red, and it's been down. Last time I checked, it was down by, Bitcoin was down by 3%. In the last 24 hours, and it actually breached at 3,500 level. I think it went as low as 3,350. So it lost something like as much as 5% overnight. And it's we've been saying this over and over again, like the fact that several major news that occurred with the withdrawal of the proposal for the VanEck SolidX CBOE-backed Bitcoin ETF, with Backed putting their launch on ice. You know, it seemed like the big decisions are all linked to do with the partial government shutdown, and they're just putting that on ice right now. And so far, from what we see, it's not fundamental reasons that the market has decided to dip below the 3,500. It's actually a more technical side, which I'm sure you're going to break down. But it's crazy because if it continues this way, you know, with the negative sentiment, market almost expecting there to be another crazy volatility, full of volatility period where we experienced last year. So I'm sure you've noticed as well, Yusuf, like the market seems to be between that, you know, range going from 3,000 to 5,000, and we're somewhere now stuck between 3,000 and 3,500. But if it keeps going on, it's okay. But from what we're expecting, at least on the fundamental side, unless we get some major developments, you know, that are key to unlocking where we are right now, it just looks absolutely bearish from now. In fact, we had the CEO of VanEck making a comment that they did a survey. Yes?
I don't mean to interrupt you. Do I sound choppy to you, or is that...
oh, no. It might be... Can you hear me now?
Yeah, I hear you, just a little choppy. You can go ahead. I just want to make sure it wasn't my end.
I think what I might have to do is keep the video on, but keep...
no, it's... I mean, you can go ahead. I think it's better now.
Just give me a second. Just give me a second. Oh. Okay, so what I'm basically going to try and do is iPad, but I was just saying that the VanEck CEO made a comment about after doing a survey of thousands of Bitcoin investors and noticing that their number one choice for this year in terms of keeping their exposure to the market as minimum as possible, and considering other different asset classes, gold is actually what they're thinking of investing in, and weathering the expected volatility that's coming our way. But I'm just, give me a moment, I'm almost there. Okay, I'm gonna just get on the link now. It's just much easier. Okay. Right, I'm gonna mute my voice here. Okay, you're able to hear me now, right?
Sounds better.
Okay, cool. Okay, so with that being said, though, you know, it's been crazy. We've been seeing that this, you know, it's been stable for several weeks. It reminds us of what happened last year in 2018, where it's been stable and less volatility, you know, about around that 6,000 price range for quite some time. Then it broke down. So that's where we are looking to head in terms of the breakdown, which I'm sure you're going to speak on. But we're literally looking for firm direction right now. And the market is seemingly taking a, you know, they're just waiting and seeing what else will happen, if there's going to be any, is it going to be more negative news that comes out regarding regulations from the SEC, CFTC, any more withdrawals, any more crackdowns. But literally, it's just we're on tenterhooks, wait and see approach. But what's kind of you know, strange is that at the same time, this you know, these crazy price action is going on. We're seeing that the market, the industry, the ecosystem is still developing. Now, what we've noticed is that Bitcoin's transaction rate actually has been growing steadily over the last year. So it's been something like doing over 280 transactions a day. And the use of dApps as well, smart contract protocols, it's been recovering. Another development that came out to help make the adoption much easier for merchants, customers, users is Bitfury. They launched a product suite that will help to promote Bitcoin's Lightning Network, which is, you know, with the Lightning Network, some of the problems that we've been facing with Bitcoin has been the volatility, has been transaction fees, has been, you know, scalability issue. You know, if you're going to compete with the likes of Visa that does millions of transactions within minutes, then you need to have a system that can handle that, you know, level of volume. And scalability is not just a Bitcoin issue, it's an industry issue. So the fact that this is still happening in incremental, like there's you know, 4,000, something like 4,000 payment channels and counting. And so anything that adds to the not just Bitcoin infrastructure, and, you know, we're seeing with the network effects, even with the price where it is, we're still seeing that that's growing and developing. So anything, anyway, fundamentally, anything that can help to make the transactions faster, easier, it will certainly help to promote, you know, the use of it by merchants as a form of payment method, and also by consumers. And that's the key thing, guys, with the Lightning Network. It does make it easier for merchants to accept Bitcoin, and the minimal transaction fees, the instant payments. That's why Lightning Network is getting more and more trusted, in able to help resolve some of the, you know, deep-seated issues that Bitcoin has been facing regarding scalability. Now, and if they can make that clean, they can make that reliable, you know, no extra costs to the consumers and the merchants, that's gonna definitely help in the long run. Another thing we've noticed as well, Bitcoin miners, they're starting to leave like familiar pools, mining pools that they get because of the, you know, high amount of computing power that they need to mine these blocks. They're actually leaving the major pools and acting independently, and that only happens if there's more confidence in what's to come. And so that actually, you know, the fact that they're doing that, you know, moving from the comfort zone of pooling the hash rate together and splitting the rewards and going out on themselves, is another sign as well. Also, we've mentioned so many times, we started off with Tether, branched to different types. Some of them are regulated, some of them are pegged. And the fact that it's diversifying, it is sort of a sign of some of the problems regarding how not just with the volatility aspect, not just you know, help you minimize exposure to other assets, but actually it has more, what can I say, it's going to end up playing more than one role. And so the fact that this is it's not just a good thing for people, traders, for example, but it's actually given more confidence to the industry as a whole, and given options, is bringing variety and diversity. So that's another segment in the crypto in the industry that's still developing, and anything that helps to reduce risk to stakeholders is a good, especially in this turbulent environment. And the fact that now they've learned their lessons from the Tether scandal, and they are making sure that every dollar that it's pegged to can be audited, can be traced. This was trust is such a huge issue in the crypto space, but with stable coins after Tether scandal, that is going to be another thing to watch out for. If there's a stable coin that has it's not fully audited, no way to check and monitor whether these funds are backed, these coins are backed by real funds and in a bank account somewhere with independent auditors, then don't even risk your money when you have other choices. So what are your thoughts on that so far? Or did you want me to continue?
Go ahead. But I'm actually learning a whole bunch of the stuff that you're speaking about. Can you hear me?
Yeah, I can hear you. Yeah.
I had to turn my audio off so yours can be clearer. But yeah, that's crazy. But go ahead and finish, and then I'll chime in towards the end.
Okay, cool. And then another thing, guys, I'm sure you're aware of local Bitcoins. I've definitely used it previously. And for some people, I mean, one of the funny thing is they part of this tagline or their slogan is that it's instant, secure, private. And it does cover I mean, if you go to the website and take a look at the areas that it covers, something like 16,000 cities, multiple countries, and you can always compare with what the rate is somewhere. So you can even do arbitrage if you wanted, if you had spare time in your hands, buy Bitcoin at a lower price in one area and then sell it somewhere. The way is that there was a hack, some unauthorized transactions on 6 accounts. Now they've usually their security, I definitely checked as well, like making sure they're legit. When I first opened an account with them, that the security was legit, and I always have my 2-factor authentication, guys. I can't stress it enough. But with these 6 accounts in particular, they got hacked. It allowed the hackers to steal funds from at least the minimum. I mean, this is what they're saying, but it's minimum 6 accounts, and that they did find the problem and shut it down. Now, the fact that this has happened and hackers have tested their system, I'm not surprised. In fact, the mentality that every exchange, we've said this over and over again, every exchange in the crypto space, if they haven't learned the lessons from all of these breaches, from, you know, CoinRail to the smallest of accounts, every exchange should be doing as much as they can, as much as their budgets would allow, doing their very best to ensure that they're on top of their security provisions, because we that Mount Gox, we've learned the lessons from, hopefully some have learned lessons from Mount Gox scandal, and so on. It just goes to prove, like, with even in the 10 years that we've been since Bitcoin's inception in this space, that exchanges are still vulnerable to attack, depending on what they've done to, put a fortress around the systems. But the fact that this is still happening, it does remind us to make sure we take precautionary measures ourselves. Don't use same passwords again, or don't use same passwords for different accounts. Add two-factor authentication. Don't be doing silly things with the information with the account. And just the reason why I say that is that some people literally think that because of the reassuring noises that they hear, or if I'm with this big exchange, or if I have diversified and put all my different amounts in different exchanges or different whatever, I'll be fine. Literally, go in your mind. I hate to be a Scrooge or a fearmonger, but when it comes to exchanges, you actually have to go in with your armor, invisible armor, and assume. Not saying that every exchange is ever going to be hacked or tested or whatever, but assume that you may be a victim at some stage, and make sure, number one, it's a golden rule, never invest any more than you can afford to lose. So whatever amount of money you're leaving in exchanges, it must be something you're willing to lose in the worst possible case if we have a hack or breach. Now, with some exchanges, they do, even if they're not insured, some of them actually, because they don't want their reputation to be further hit, and also they don't want to lose their existing customer and deter new customers, they want to be acting swiftly. They want to ensure, not only be reactive, but proactive, and have policies in place, communicate, even if it's a simple thing as exchange-wide email to the client base saying, hey, this is a reminder to do this security check, have bullet points, make it easy for them. If they don't set reminders for themselves, let the exchange find ways, to allow people to know where they are security-wise, but getting people to actually take responsibility for their security and ensuring those steps are done. Now, some of them, exchanges actually have a reserve. They have a contingency just in case they get hacked. However much the value of the cryptos are on the exchange, and it's not moved to cold storage where it's not connected to the internet. Even if they somehow get hacked on and they put it in their hot wallets or something, if they get hacked, that they're willing to match that, they're willing to return that back. Whatever customer has any amount of money that they've lost, they're going to match that. Now, not all exchanges do this, but what we're noticing is that they're taking they're going hard on multiple fronts. Now, some of them are putting money aside to make sure that they can, back whatever, 100%, however much it's in their system. But some of them also have insurance policies in place, and some of them actually have some sort of agreement in place, depending on the type of breach it was, depends on whether it's retail customers, into institutional grade. So some of the custody solutions out there, they have double protection, triple protection. That's on another class altogether. But they simply have, all these formulas in place. They even hire hackers. They even hire, what do you call it, security experts from different areas, not necessarily crypto and blockchain, but from other areas, and be able to see if there's any way that they can hack their systems, hack the exchange, learn lessons from that and apply it. So we're seeing, oh yeah, another thing is that instead of waiting for the government to push down with regulations, some of them are actively coming together, collaborating with each other and saying, hey, let's self-regulate each other. Let's see how we can use our economies of scale, our purchasing power, our not purchasing power, our influence and control, and our bases, to leverage that and be able to see what other ways they can strengthen their security. So I wanted to mention that because even with local Bitcoins, they fixed the problem. It was to do with the forum feature. It's been disabled now until I believe the problem has been fixed already, but they're disabling it so no other future attacks gets done. And the fact that the feature happened through a third-party software, that gives you another clue. And this should have been prevented if they buffed up their security. Now, then they're not obviously going to let us know exactly, what failed, technically speaking, because that would give it away to the hackers next time. But the fact that, this is a test for them. Every exchange, even if they don't get hacked, they should assume that at some point they will get tested by hackers, and they should have that assumption that they'll, at some point they'll be under attack, and have policies in place, provisions in place, and making sure that, they're viable security wise. Otherwise, what may end up happening is that they get hacked. Customers not only lose their money, but they lose their trust and faith in that particular exchange and not come back. And that could be a lot more costly than the money that they ended up losing. So that, especially in the bear market right now, where there's suspicions of exchanges and all sorts of reasons to be very pessimistic about the industry security wise, this is the time where they need to learn these lessons. They need to ensure that they communicate frequently with their consumer base and let them know, hey, this is where we're at, this is what we're looking to do, this is what we're going to improve on, but we need you to come at your end of the deal. Be wise, be vigilant, robust, making sure you do the basics, the two-factor authentication, the passwords, make it as hard as possible, and don't make it personal, don't make it multiple times in different places, simple things like that, because some of these hacks, they're able to worm their way in via something that could have been preventable. And sadly, even though with all the news regarding these hacks and breaches, there's still a significant amount of investors not doing the basic diligence on their accounts. It's your money. It's not the bank looking after your money. It's you. You're down to be responsible for your own crypto, for your own wealth. And so that comes with responsibility, such as your security. And we say this a million times, again and again, we're broken record. You see it everywhere. Articles, YouTube videos and whatnot, but we need to, you know what ends up happening is that each time we do say this, someone actually texts back and says, oh, you know what, thank you for reminding me, I was putting that off, or I thought this would be safe, I didn't think about that, let me do this now that it's fresh in my mind. So when we're doing that, we're actually helping, even if it's helping a few people, those few people, that's less people that would be hurt and affected if something, God forbid, bad was going to happen to their account, through their fault or no fault of their own. So, I still like local Bitcoins. The fact that is now kind of giving them a scare, they're going to boost their security. And it is, guys, if you still have an account, if you don't have an account, I would still, recommend opening one because I've had a good experience so far. Obviously, we always say not financial advice, but any trading that you would do, any purchasing that you would do of cryptos, you do have to understand that even with a company as secure as local Bitcoins or any exchange, always assume always assume the worst where security is concerned, just so you're up to speed and you're, you know, fully, you have that peace of mind knowing that you've done your work, you've done your diligence on it, and not just relied on the company to protect you. So that vulnerability, there'll always be vulnerabilities in this industry. We can't run away from that. It's a fact of life, because with any industry, there's always vulnerabilities. There's always ways to hack the system and, you know, get around it. That's why it's important that these breaches serve as a reminder, as lessons, without having to pay the cost ourselves, that this could very well affect me at some point. Let me just get it out of the way and be done with it, you know. You guys must have heard as well, Cryptopia, I've used that before as well. Cryptopia suffered a couple of weeks ago a breach in their system as well. Some money was transferred off the crypto wallets, and some people are saying that it might be an exit scam. Some people saying it's something else, but the local police in New Zealand are involved, and they're trying to track down all of this, you know, what happened, trying to identify the source of the transfer and so on, and see, you know, what it links to, what they can do. Now, on top of that as well, I wanted to mention South Korea came out with some development that the 4 major exchanges, they are, in order to combat money laundering, they actually are coming together. So BitThumb, Upbit, Corebit, Coinon, they have established a hotline where users can actually share information on anything suspicious, trade-in, payments that are a bit weird, and just suspicious of any financial crime being done. And now that's something which we need. Like, the more we see any sort of features, whether it's a hotline, whether it's, you know, a feature we can click on, a button on the page or something, anything that makes our lives easier and safer, that is that. You know, this is not new regarding South Korea. Remember, they've been hit previously with breaches to the exchanges, and even the South Korean government, and also with Japanese, if you remember, they got affected as well. But these got, even the from the government, the regulators telling the exchanges to, you know, to beef up their security. But those exchanges, even if they didn't suffer a hack, they're on their way right now to creating these features that will allow, you know, consumers to feel safe, and they're being proactive and not just, I mean, this pressure is also coming from the government, but they're actually beginning to realize that for their long-term, you know, not just security, but in terms of doing business, it's actually going to help their brand and their, in terms of loyalty. That if they're known to be, listen, even if they get hacked, what people look at is the response. What people look at is to see if there's strong contingency plan. They want to make sure that they have their clients at the heart of this, that their interests are being met. Highly regard the number one thing where exchanges are concerned is not the trade-in fees, transaction fees, it's actually the security. So with that being said, if you remember in January, there was 7 out of 21 local crypto exchanges that received approval from the South Korean government after the government did a security audit. And that actually is a good thing. If the government is pushing the crypto exchanges to feel like, you know what, I need to ensure that I've bolstered the security side, it's going to be good for their business anyway, with their consumers making sure they still have confidence and faith to trade on the exchange. And so you're going to be hearing a lot about this over the next, not just in the next few years, but it has to be literally at the foundation it has to underpin, you know, in terms of the operational side, they have got, it's not even an option, it's a must. It's, if they want to survive long term and make sure they can handle any hacks, any attempts, anything negative regarding security breaches and whatnot, they need to ensure that they have that, could be on a proactive approach and make sure they never get comfortable, and find ways that they could improve that. And so the fact that, you know, there's news coming out regarding that from not just South Korea, but Japan, that's fantastic. And I also wanted to mention Iran as well are going to be launching their rial-backed cryptocurrency. Now, remember we mentioned before that this was to avoid the US sanctions, and because they are actually locked out of the SWIFT banking system. So the electronic banking and payment systems that different countries use to be able to settle payments and so on, critical in the traditional space, very critical, and it would literally hurt, you know, the country's economy if they get blacked out and shut out. So that's what happened with Iran. Iran saying, hey, you know what, we're not going to take this line down. We're going to create our own crypto. The Russians are creating the crypto ruble. Venezuela tried with their petro, but that's been discredited, and they've got a change in government. The president is not a fan of petro, as I said before, because he thinks is to exploit the people, and really as a front to help Maduro, you know, continue with his corruption and so on. And so with Iran in particular, the fact that they're gonna, with their state-issued cryptocurrency, remember the US has been placing them under sanctions since November last year. Now, other countries are watching, other, you know, economies or even, you know, countries that are, they want to find ways, even if they're not enemy of the US or Europe or whatever, they want to see if there's any ways to be independent and just even if to reduce their reliance on the Western financial systems. They're watching very carefully as to how successful Iran would be. And Iran, you know, it's a love-hate relationship with the Americans right now. But the fact that they're going ahead with this, you know, national, it's backed by their own national currency, and that's to facilitate the payments between the Iranian banks and other institutions. Even the crypto space is looking at this to see how it's going to work out. And see if this is going to be a standard for not only for what do you call it, not just to evade sanctions, but to see if this will actually help develop the economy. If there's, you know, corruption or devastation somewhere else, they may be thinking of getting away from the traditional systems and seeing if crypto would help in any way. And again, this is why what Iran's doing is not really just for them, but really it's going to end up encouraging other countries that are trying to get away from the SWIFT system, or simply looking for ways they can diversify their banking system and have that sitting alongside the traditional. Now, it'd be interesting to see if Americans would then put sanctions on those countries that leave the SWIFT system behind and, you know, do their own fiat-backed crypto or gold-backed crypto or whatever natural resources that country has. But this is definitely concerning for the US dollar because a lot of the systems and countries that we still have this current situation with the US-Chinese trade war. We're seeing the Chinese are trying to get away from the influence of the Americans. We're seeing that Russia's trying to reduce that, investing in gold, Bitcoin, and leaving the selling of the US debts and US bonds and gilts and whatnot, and reducing reliance on anything US dollar backed, anything that has exposure to that. and they, remember, they are also, they face sanctions from Europe and US as well, for several political issues. So this is something that we're going to definitely be seeing more and more countries looking for alternative ways for different reasons, seeing if there's any ways that they can get ahead, regardless of how big or small or less powerful they are from the States and America. I mean, Europe, they're still, you know, going to dabble and try and test and see how this really works on the floor, in the, you know, in reality. So, you know, this is something which, oh yeah, another thing to watch is that you're going to see a lot of partnerships be made with Iran, Russia, China, on a lot of things regarding financial, business, trade sort of thing. And part of that mix may be blockchain related, crypto related, because you guys may have heard with the Chinese, they're not fond, then they're banned ICOs, they're banned the use of cryptos domestically, but they are a fan of blockchain technology. And in fact, they're the #1 country in terms of patenting blockchain ideas. So that is something to watch. And in fact, Europe were worried and said, hey, you guys, European side, you better step up your patenting game as well, making sure your ideas are protected. And because the Chinese are first, the Americans are second regarding to that. And so that's another thing as well. So and also with the Americans, they've already warned Iran several times to drop their crypto real, but there's I don't think that Iran has any choice. They're going to end up following through, and that apparently there will be consequences coming from the US if they do that. I don't know if it's more sanctions or whether there's going to be military option involved, but you know, some people are just thinking that it will give America another excuse to go into another conflict, another war. But on the crypto side of things, from what I can see, Iran has to do something to survive, to be able to get away, because these sanctions are hurting their economy. And for them to even contemplate that means they must be hurting badly, that they need to resort to that. So that is something which we're watching closely. And then in terms of regulations on the other side, the Italian lawmakers, they've decided they're going to help to legalize blockchain technology and the use of cryptos. And they did that by starting with the first thing that any country, any jurisdiction needs to do is to define cryptocurrencies, define you know, what securities are, what smart contracts are, you know, how they're going to be treated for tax purposes, and so that is something that the Italians are doing, and it's step by literally baby steps to try and legalize cryptos and blockchain technology and integrate that into their economy, into their ecosystems. And they said that was a fundamental priority for them as a country, because if you've seen some of the what's been happening to the Italians, they've been suffering with economic woes. So they are definitely looking for alternatives and looking at the advantages, and that they're going to help to have these standards, and they're looking to adopt it within 3 months following adding the the bills in Parliament. And then on top of that, you have Belarus as well. Their largest banks are considering setting up a crypto exchange. Now, what we're seeing literally with the different European countries and economies, remember in Europe, they the ones that are part of the Euro, the European Union, and they take on the Euro currency, they may get economies of scale, they may get political influence, and they may be able to through the imagine going to Costco and you can get economies of scale. It's cheaper for you because you buy in bulk. With European Union, they literally have all these countries and the economies come together to negotiate better trade terms and deals on behalf of their members, and it's almost seen like some sort of exclusive club, and it's sometimes seen as almost like a United States of Europe, because they work very closely, not just economical, political, but security wise as well, you know, with the immigration crisis, with the you know, financial crisis that we saw in Greece affecting, you know, the Cyprus as well, and having you know, the run on the bank, and finding you know, what was I going to say? So customers literally panicking and trying to find alternative ways to be, you know, keeping their money safe. And part of that has been this interest in, we saw what happened with the Turkish lira. They're not part of the EU, but what had happened was when the Turkish lira suffered a crash, people moved some of their funds, some of their money into Bitcoin, because they saw it as less volatile than the Turkish lira. So it didn't erode as much value as you know, what would have happened if they were in the main home currency. They suffer from hyperinflation or some sort of economical, any sort of manipulation. You know, monetary policy has gone bad. One of the things that we have definitely been seeing is that they've been, you know, looking for alternatives, and they've been seeing Bitcoin is that regardless of where it is price point, there's still evidence that people are moving some of their funds, not all of it, but just some, so they can, you know, reduce the exposure of their home currencies, such as the Bolivar in Venezuela, and South Africa had an issue as well at one point with their rand. It happened very close to the time that the Turkish lira had gone down. So we saw activities at that time, you know, move into the, when you look at the price and the time that it occurred, you saw the Turkish lira go down and Bitcoin go up at that time. And there was a lot of the people that moved their money, it was literally a decision that they made at that time. It wasn't premeditated. So we know that people are seeing cryptos as, in particular Bitcoin, they're seeing it as an option to safeguard some of their money. Yeah, so Belarus is looking to do that. And then the Swiss are also, mentioned this before, but they've got the crypto valley there in the, I think it's called the Canton of Zug or something, where you have all like major blockchain companies, founders, all, you know, looking to take advantage of the fact that the country is crypto friendly. And another, there's a private bank called Falcon Bank. They've now introduced direct transfers of Bitcoin, Litecoin, Ether, Bitcoin Cash for private and institutional investors to transfer, you know, from the bank's own wallets to and get that converted back to fiat and whatnot. And the key here is that they've managed to integrate the security features of, as you may be aware, the Swiss are they have a proud reputation of being private, but also having robust, secure facilities. So they've been able to apply that on the crypto side as well, use their leverage money and resources to, you know, create those infrastructure and facilities, making it easier, convenient. But number one thing is also private, but also number one thing, which is security. So again, anything that makes it easier and better, faster, more secure for any type of investor to be able to get in and out and make it as liquid as possible, make it as seamless as possible, is going to end up helping to drive the usage in that particular place. So, and this is with immediate effect. And we're just seeing that if things are made easier for people to get on board and, you know, at the point of entry, at the point of usage, you know, things have been explained to them, things have been made user friendly, and you know, it just helps not only in terms of the usage aspect, but also that company looks at the feedback that they're getting and deciding whether they're going to invest more time or more funds in expanding it. And that's why we're seeing a lot of these banks, they're coming out, or exchanges, and companies, startups, looking to do all these test pilots, and if it's successful, they expand it. And that is literally that's been the almost like the blueprint, going into a new asset class that they may not have any confidence, or you know, they see it working for some other banks or other industries, other exchanges, but they want to adapt it to their market, to their customers. As I keep saying again and again, no one size fits all approach in this industry. So they got to find what works. They're going to make mistakes, but they're willing to take the risk and, you know, and go with the flow, literally, and see how things turn out. They've got the best minds, the best, I mentioned this before, even during the bear market, the number of hirings for programmers, engineers, coders, consultants in the industry has actually been growing. And so that investment in time, money, effort, labor, you know, all these things slowly do add up over time. And at some point that value will be manifested in different ways. So the fact that they're doing this now, during the bear market, it's not just happening to one particular sector or community or whatever. It's actually happening across the board in the crypto space, with different projects, exchanges, different stakeholders, as I keep saying over and over again, that there's all these movements and you know, inward investment happening in different ways, that's slowly adding up. These numbers are adding up, and helping to sort of you know, broaden their broaden a lot of the strategies, operational strategies out there. How they incorporate the blockchain aspect, the crypto aspect, that's now increasing, and at some stage it will manifest itself to becoming some sort of standard, where at the very least they have policies in place, ideas in place, pilots in place. They don't have to go gung-ho or, you know, do their own blockchain, do their own current cryptocurrency, do their own stable coins. No, they're testing it, seeing what works in their industry, with their customers, with their stakeholders, and seeing what works for all of them, and try win-win situation while minimizing the risks. That is definitely not going to disappear in this space. In fact, that's only going to end up evolving, and they're going to have to, the question will be, can they keep up with the pace? Can they keep up with the battle on the front lines? Because the front lines keep shifting. So yeah, with that being said, thank you for, I know I've taken up some time, but what are your thoughts so far? Hello?
I'm just enjoying the show. I'm actually getting a chart while you're talking.
Cool.
But basically, from what I understand, everything is delayed and put on the back burner.
Yes, and exactly. And the funny thing is, you know what, the market expected this in a way, not the suspension, but the, what do you call it, the weird place that we're in right now, because things have been so hyped up, things have been you know, the anticipation, and also the suspicion as well, knowing that with the government shutdown, the longest in history, the market already suspected, actually, you know, before it happened, I don't see how they're going to get approval. I don't see how they're going to have some sort of movement right now, when, you know, the government is stuck right now. It's not even moving. How are they going to put the laws in place? How are they, you know? So they put two and two together and sort of priced it in. So when the news did drop, you didn't see this crazy, you know, sudden drop at the news. Actually, it remained kind of stable. Even though, you know, people, we were expecting the launch, I mean, it got delayed so many times with the launch of BAC, but actually the market sort of, as we got closer to the time, expected, nah, I think because they were saying subject to regulatory approval and seeing who were in charge of the, you know, approval process, they've been affected by the government shutdown. So put two and two together, you know, it was inevitable that they were going to withdraw. But if the shutdown didn't happen, it literally would have been a complete unknown that they were going to withdraw it and whatnot. And the discussions that they were having, and they're still having with the SEC, is still ongoing, but you know, they still have those issues regarding price manipulation and investor protection, you know, security wise, you know, what's going to happen at those critical points, and whether all of the burden, what features and protections will be there to, if they cannot eliminate it, what they can do to reduce it. So the government really, I mean, the people put in the ETF proposals, the futures and so on, physically settled futures, they really wanted the case is on them to, the burden of proof really is on them to make the case to the US regulators and say, you know what, we've got this in place, where, you know, this is basically to prove and demonstrate their credibility on that wise. And obviously they're going to also point to the fact that in the traditional financial markets, they're reputable. For example, the parent company of ICE, one of the partners of BACT, they are the parent company of the New York Stock Exchange. Some of the strong advantages that they have is the fact that they have these policies in place and federally regulated clearance houses, warehouses and whatnot, where they're dealing with the commodities and making sure that they can deliver to the customers in a way that's insured, secured, regulated, and monitored and whatnot. They want to do the same with the Bitcoin settled futures, but they really are concerned about the price manipulation aspect, because with the US system, you know, it's heavily regulated, and so they can't really get away if they were trying to price manipulate. That they've got strong security monitoring tools and whatnot for them to be able to track that. They have a ecosystem in place to get to look after that. So it's just a case of we're waiting. The whole industry is literally waiting with a bated breath. Like it's almost at a point where it's by default that the market is expecting further price drops to happen, because we're not seeing some real important crucial changes that will help the industry get back on track in terms of Bitcoin's price for any reversal or, you know, bear market to calm down and accumulate, then, you know, consolidate, and then create, you know, go into a bull market again. There's all sorts of these different expectations from different people, and you know what's happened as well, you know, the predictions that they were making about Bitcoin, saying that they were going to be 20-something thousand, 28,000, I think I heard one, by the end of 2018. And that's because they didn't expect the government shutdown to happen. They didn't expect some of the problems like the Bitcoin Cash hard fork impact to happen. There's certain things that they weren't expecting that happen, and that's a lesson to all of us. Even if the media is saying, oh, you know, this is happening, it's a surefire way now, you know, at some point this is going to be the catalyst. It's actually a lesson for every one of us to be on our guard. At any point, literally anything can happen with the market, and that even though we're seeing these developments occur on every area, which is great, the way things are right now, as they stand on the big issues concerning, you know, whether institutional investors are going to come in and finally help stimulate the, help to be a catalyst to help bring back more volume, more interest to the market? Or is it going to take, regulations to be approved, ETF, Bitcoin ETFs to be approved and, be the norm? Is it going to be more coins not being considered as security? Is it going to be the definitions? Is it going to be the laws that are written in Washington? What is it going to be? Because we're seeing, and even in the bear market, states like Ohio, Pennsylvania, now Wyoming's on the list, Colorado, all these, they're not waiting. They're going ahead and somehow adopting or integrating the use of cryptos, whether it's to pay for taxes or getting discounts or something for something else, to have that as a feature in their business, for domestic, business, or for people in their state. The fact that they're going ahead already and doing these policies themselves, not waiting for clarity from the federal side, is actually good news for the industry. But that's not that's not actually being priced in, or maybe it is, but right now where we are in the bear market, it's like whatever good news you throw at it is not going to stick because of where we are right now. Taking the initiative and it works. That's the most important thing. It works, and they've adapted it to their market. I don't see how they're going to go backwards unless the federal state says, hey, this is the way it's going to be done for all 50 states, no ifs or buts, and there's no flexibility for to create amendments and provisions in each in each state. Then we're just going to see most of the time that these states are going to, they're not going to take it lying down. Basically, we're in this gray area, and until on the federal, until they hear otherwise, until they hear federal government is against cryptos and blockchain, shutting it down, like the Chinese. Actually, the Chinese promote the use of blockchain, but not the crypto side, because they don't have control over that. And until we hear the we need more concrete. And unless the market hears more concrete, something, definite. Until we hear that, right now it's a gray area. It's a free-for-all. So states are doing what they want to do within reason, within the confines of the existing laws. We're seeing different jurisdictions. Some of them are more crypto-friendly than others, going ahead and doing whatever they wish. We're seeing different stakeholders do anything with whatever they wish. Because there's a lot more scope right now to take advantage of the uncertainty and gain, experience, time, money, whatever, and there's opportunities. Whilst there's this gray area, whilst there's little to no regulation regarding cryptos in particular. So I think this is the final part, guys. I think this is it. Once we get the, crypto legislation go through, that's it. It's over. The government's going to continue trying to get into the industry, trying to find ways to manipulate and control and influence it. So there you go. Like, make the most